Hello everybody, this is AK. I'm back. So with all the recent videos I've produced on China and whether it's investable, and also I produced a video on EC World REIT, which is in trouble, and how to avoid investing in REITs like EC World REIT. Some readers think that I've become very pessimistic about China and that I'm abandoning boat. That's not true. um, I mean, I'm invested in many businesses which have exposure, right, to China, and the most obvious one is the REIT called CapitaLand China Trust, right? That's 100% in China, so its fortune is tied to the fortune of the country. Okay, so I think I should look at CapitaLand China Trust more closely, since it's one of my smaller, largest investments. People who have been following my blog would know that is this. One of my smaller, largest investments means that it's bigger than the value is more than $100,000, but less than $200,000, right? If I remember correctly. Okay, so a reader rightfully asks whether CapitaLand China Trust has the same problem as EC World REIT, right? Because they have short land leases, and they also have plenty of offshore debt, right? That is certainly true, right? Land leases in China, longest usually is about 50 years, and usually we see them like 30 plus years. 20 plus years is quite common. So if you want to invest in real estate in China, that's the reality. Okay, so I think if we don't like that, then China is out. Just to invest in Chinese real estate, right? If we can accept that, then the next issue is the offshore debt. I said before that if we are investing in a foreign country, any debt that we take to fund that purchase in that foreign country should be in that country's currency. This is because we want to have a natural currency hedge, right? Because hedging against currency movement is very expensive. So I talk about this natural currency hedge in my video on EC World REIT and how to avoid investing in REITs like EC World REIT in future. If you have not watched that video yet, I will leave a link to that video in the description box below, so please go and watch it. Right, and to put it in a nutshell, why is bad to have offshore debt? The thing is that when we buy a property in a foreign country, and if we have to borrow money, right, to fund that purchase, it's better to borrow money in that currency, in that country's currency, because it provides a natural currency hedge. Okay, and because hedging is expensive, when we have a natural currency hedge, we do away with that expense, right? Avoid something that is costly. Why not? And as an example, now that CapitaLand China Trust, right, having 80% of its debt as offshore debt denominated in Sing dollar, the renminbi has weakened against the Sing dollar, and just because it has weakened against the Sing dollar, its assets in China in Sing dollar term has come down in value, right? Has come down in value, and but its borrowings in Sing dollar, that number is still the same, which means that without them having to take on another cent of debt, without them increasing their borrowings, their gearing level will go up. Their gearing level would go up. So their gearing level is not low, it's already at about 40%, right? And so without them having to borrow a single cent more, their gearing level will go up simply because of foreign exchange fluctuations, renminbi weakening against the Sing dollar. That is a risk factor that we have to bear in mind when we invest in CapitaLand China Trust right now. So if the RMB, renminbi should weaken against the Sing dollar even further, there could come a time when we might see equity fundraising or fundraising of some kind, placements or rights issue. right, to strengthen the balance sheet for the trust, especially if they are still looking to doing acquisitions in order to grow their portfolio in China. So possible risk of more rights issue, something to bear in mind. And 75%, I mean, this is something else that we want to keep in mind also. 75% of their debt is on fixed rates, right? 75. So 25% on floating rate. So if interest rates continue to go up, that will also impact the distributable income. That will impact the distributable income. I mean, it's better than the 60% that we see for REITs like Suntec REIT and Land Lease REIT, and 40% of their debt on floating rates. So for those type of REITs, even more, if interest rates should stay higher for longer, or in fact increase further, that would reduce their distributable income by a lot more. So in CapitaLand China Trust case, 75% of their debt is on fixed rate. Hopefully they will increase this percentage even more in future when they do their refinancing. Okay, so for this, at the current moment, we have to realize that this is something else that we have to live with if we should invest in CapitaLand China Trust. And currently the distribution yield is about 8% per annum, if I'm not mistaken. And I think this is a fair distribution yield. It's not very attractive, overly attractive. It's fair because, number one, the land leases are very short, right? So I've said this before, if it's freehold property, we can accept a lower distribution yield because we have a lot more time to recover our investment, our money. But if the land leases are very short, then we have less time to recover our investment. So we would demand a higher distribution yield. So an 8% distribution yield seems, reasonable, because it means that you get back your investment within 12 years or 13 years, that kind of thing. Not fantastic, but okay lah, And but now with all these risks that I've just mentioned, I think we should naturally demand a higher distribution yield before we put even more money toward CapitaLand China Trust. Okay, but the biggest problem with EC World REIT, we don't see in CapitaLand China Trust. All right, so we don't have to worry about CapitaLand China Trust going the way of the dodo, I think, right? Unless China goes kaput lah, the biggest issue with EC World REIT, if you have watched that video that I mentioned earlier, is financial engineering, right? Basically, they did a lot of financial engineering so that at its IPO, they made the REIT look a lot more attractive than it actually was. Okay, and that kind of thing we don't see in CapitaLand China Trust, right? So I'm not going to add to my investment in CapitaLand China Trust at this point. But if the unit price should drop much more, everything else being equal, I might add to my position. Okay, so if AK can talk to himself, so can you. Bye bye.